Good morning, traders, and welcome back to another episode of Market in the Morning. I'm your host, Kevin Dubrisky, and we have a packed episode for you guys. So, yesterday we had FOMC. Obviously, Powell was holding rates as expected, but gold is selling off. The S&P took a big hit. What is really moving markets right now? We're going to cover some headlines. I'm going to tell you guys what's moving markets, and I'm going to give you guys some trade setups to keep an eye on as well. So smash that like and subscribe button if you're ready to make some money today. It is Thursday. It is March 19th. Hope you guys are ready, man, because Market in the Morning starts right now. Alrighty, good morning, guys. Let's dive right into it. First thing I want to note, guys, right off the bat, is look at the momentum we're seeing on gold to the downside. It has been some time since we've actually found some momentum, and here we are. A lot of people were expecting it to break to the upside, like we have been seeing for quite some time now on gold, but it's really dropping to the other side. We broke below 5,000 just yesterday, and now we're all the way at 4,600. This is a massive sell-off. What's going on, everybody? Good morning, everybody. Hope you're all doing well. Happy Thursday, man. Let me know what commodity or asset you are trading today. Using a tool like Market Guys, we're able to break down what's fundamentally moving markets, so we're not sort of just guessing with the technicals. So gold slides towards 4,700, which we know is now below 4,700, as Brent tops $115 a barrel. Bank of Japan and UK wage data fuels inflation fears ahead of Bank of England and ECB. So this is pretty big, guys. This is a lot weighing on gold right now. And this momentum we're seeing, guys, there's a difference between chop and momentum in the market, right? When we see momentum like this, we're not trying to catch a falling knife, right? We don't want to be, oh, Iran, we still have the conflict. Guys, that has been going on, and we have still been bearish on gold. So clearly, trying longs right now, with that being the only bullish fundamental bias, is not strong enough to help gold move higher. So let's take a look at the hourly time frame. Let's mark out some key levels, some key zones. I'm going to show you guys exactly what I'll be looking for on gold today. So the most recent area that we have that we consolidated, check this out, guys. We consolidated overnight. We had our big sell-off. This is around 48.50. We see historically, we held this area in the past too. So my key area that I'm watching today for possible shorts on gold on a pullback, guys, would be around this 48.50 area. So we can use our short position tool, map that out. And we're going to be looking for would be pretty solid. A 4-to-1, almost a 5-to-1 risk to reward. Could tighten up on the stop loss and have an even better RR factor. Yeah, natural gas. We could definitely look to cover that in a little bit. I want to cover the main assets that a lot of people like to trade first, like gold, the S&P, and NASDAQ. Guys, keep the tickers rolling in the comments, though. Would love to hear what you guys trade. And before we do break down some more markets, don't forget to claim your spot in the Market AI webinar. That's going to be this Sunday. It's a free webinar. There's only a select amount of seats, so make sure you click the link below and reserve yours now, because we will be giving away some free Market AI accounts too. So very cool stuff. Very excited about that. Yeah, bro, I got you. Kyle, man, good call on that. 4 hour not having an upper wick. We know we like to keep an eye on things like that. So gold, again, upside 48.50. And what I like to do, guys, when I'm doing my own analysis is I'll line it up with market. Where's market giving me that pullback level? 47.50. Target level was already hit to the downside. We've seen a crazy move. Now, something I want to point out to you all, if you're going to trade gold today during the New York session, look at how gold has been trading during the New York session. We get these big moves pre-market, and then New York session comes in, and we get a whole lot of nothing. Nothing New York session, nothing New York session, nothing New York session. We had this little move. This was about, let's see, that was Friday. That was almost a week ago. But since then, and even before then, we weren't getting clear consolidations or clear moves. We're getting just range-bound price action. So just something to keep in mind. We are coming near an area of support. I would want to make sure that that is still valid too. Let's see, guys. Let's check our 4 hour time frame on gold. And again, the momentum behind it is extremely strong. This is not something that we would want to try to catch longs on, but we also wouldn't want to short all the way down here too. The problem with trying to short a strong move like this becomes, well, if I short it, where's my stop loss? Because guess what? If markets pull back on you, pull back, hit your stop loss, and then continue in your favor, guess what's going to happen? You're going to get stopped out. You're going to get frustrated. You're going to re-enter. You're going to revenge trade. Next thing you know, your account's gone. So don't do that. We want to be patient, wait for a possible pullback on gold. I would even consider this area over here from overnight where price consolidated, rejected. We even see this point right here with a key level. And now this is lining up more with that market level that we had, the 47.50. So 47.33, again, pullbacks. We're looking for pullbacks when we're in a trend. We do not want to take those breakdowns unless we're looking for just a very minor move. Let's run through some fundamentals on gold, guys. What's supporting this to the downside? We mentioned before how a lot of people were wondering if we have all this Iran tension, the US, Israel, Iran, all this is going on. Why isn't gold moving higher? Why are we moving lower? Well, let's break down some fundamentals and you'll know exactly why. So, Fed rate cut odds collapsing. So, Powell came on yesterday, and not only did he say we're holding rates steady, but he hinted and suggested that it's going to be a lot more difficult to get those two rate cuts if we even get two this year. It might even look like we're getting just one this year. So now markets are going to start to price in or see that fear and move lower off of that, right? This is where uncertainty enters the market on S&P and Nasdaq, and it's also driving gold lower because we were looking for that rate cut to help support gold too. Hotter than expected US PPI print, surge in producer inflation signals persistent price surge pressures, forcing Fed to delay cuts, bolstering USD appeal over gold. So remember, guys, the USD and gold are both safe haven assets of their own class. So a lot of times we'll see dollars start to pump when there's a mass amount of uncertainty and they're adding the visual appeal to the USD versus gold. Treasury yields edging higher. When yields edge higher, markets move lower. So rising US yields from inflation data make interest-bearing assets more attractive relative to gold. Same situation, guys, where we're getting a lot more interest. Always have to think of the word interest, optimism, and uncertainty when it comes to markets. When there's interest in a certain asset over another one, that other one is not going to do well. Profit taking post-war peak. So this was back when we were all the way up there at 5,600. Gold ETF holdings shrinking. People are definitely starting to sell. COMEX gold volume plunges. 25% drop in futures trading signals reduced bullish conviction as speculators de-risk. This is huge right here, guys. It's not a 5% decrease, not a 10% decrease. We're looking at a 25% drop in total futures volume on gold. What does that tell me? It doesn't tell me that retail's getting bored of it. It tells me that institutions aren't seeing it as the go-to right now. They're not seeing it as it's going to go to new all-time highs. They're seeing it as let me de-risk, let me get out of this. That is bearish sentiment right there, guys. So bearish on gold, extremely bearish, but we're not shorting the lows. Let's take a quick look at some of the headlines that have come out lately, guys. We've got Hegseth, we are taking countermeasures. Let's see. Top U.S. General Kane will continue major combat operations in Iran. So, as we know, guys, we're not ending this war anytime soon. It's unfortunately continuing. The attacks are going to keep going, and it's most likely going to have this continuous bearish impact on markets, even on gold. Four drone strikes attack Iranian opposition group. Let's see if we have anything. You guys, let's look at some Powell headlines from yesterday. Again, Powell spoke. It's very important to know what he said. Now, we did host a episode of Market yesterday. Let's pull up our news feed, look up our search. There we go, Powell. Beautiful. And then we come up to our high impact. And now we can see if you weren't watching the stream yesterday, you weren't watching Powell live, that's okay. You don't need to if you have Market. Powell, it also probably raised the neutral rate. Have to be cautious about thinking that Gen AI will be disinflationary. Excuse me. Powell, I never thought I'd see this many years of higher productivity. Upward revision in growth projection in productivity. So he's saying a lot, right? Lots of ways that oil prices get into transportation, which can leak into core. He's talking about core CPI. So, guys, we've mentioned this on Tuesday, how higher oil prices are going to impact inflation. If inflation goes higher, the odds of a rate cut plummet. We just got, I don't know if you guys can hear that noise, but we just got a lot of headlines coming in there. Let's check our Fed Watch tool for April, see where that's at. Our next Fed meeting is in 41 days. That is April 29th. And it looks like, wow, guys, check this out. We went from, wow, it's a lot of alerts going off right there. We went from chances of a rate cut in April to now a 10% chance of a rate hike. Markets are flipping. The Fed is flipping right now. This is huge, guys. You have to be aware of something like this, especially if you're a day trader. If you're not aware of this, you're at a disadvantage. You're not sure where markets are going. It's very basic and simple information that's all provided right here. Yo, what's up, Eric? Good morning, man. Yeah, Yeah, Hegseth and Pentagon briefing. Okay, cool. That's probably where all these headlines were just coming in from. We were just covering some Powell headlines from yesterday's FOMC meeting. Independence is what allows us to do our jobs. This is, of course, him referring to Trump making all of his comments saying the Fed needs to cut rates right now. I don't know what they're doing. Too late, Powell. He calls him too late, Powell. I mean, clearly the DOJ, Trump, they're trying to influence the Fed to cut these rates, but they should have zero influence. They have to be independent. It allows them to have a non-biased opinion on our economy, and that's how we're able to stay so strong, right? So people feeling the squeeze as a real thing makes us more committed to getting inflation back down. That squeeze, again, reporting from the oil, and of course, prices moving higher. Gas prices has been higher. Energy, everything has been on the rise. We're seeing a strong energy squeeze right now. No one is bound to their SEP dot. So SEP is the dot plot. Dot plot is still suggesting at least one rate cut this year, but it's not something that is a definitive, right? Dot plot is just sort of a chart that shows, hey, every Fed or most of the Feds are looking for at least one rate cut. Yeah, I got you, bro. Let's look at some ES, some NQ. I'm a big fan of NASDAQ myself. Always important to know where tech and how tech is moving. Let's see, those headlines that came in, Philadelphia Fed prices, that's what just came in over there. That's not a major economic or data event. So not something that we're going to be crazy aware of. So NASDAQ tests support as Bank of England hawkish hold, Mideast energy attacks escalate. So let's take a look at our chart, see where NASDAQ is currently trading at. Now, NASDAQ, I'm sure, like the S&P 500, we've been breaking support. So all these green zones you see here, guys, these are areas of demand, areas where price has supported in the past. We see it was support here on Tuesday, tried again on Wednesday, a couple times until we finally failed through. This was the short position we were looking at on FOMC's live stream, called out a very nice short position there, did very well. Happy to see that. Let's delete some of these other levels, are unnecessary. And let's break down. So again, we're breaking demand. We're creating new supply. We're creating resistance now. So next area that I see right here on the 15-minute time frame, at least, we're going to be looking for 24,742. So let's do our S15. Let's also line it up with market. So market has 25,361. 25,361. That's a massive pullback all the way up here. I don't know if that's 24,510, 24,510. Yeah, market's given a crazy pullback. Now, I'd be a little careful on a pullback like that, right? Because that would require us to sweep all of these highs that we've created over the past few weeks. So if we're looking for the fundamentals, which are still bearish, to hold us on this bear trend, if we were to pull back, we should not be able to break this recent 25,210. This is sort of our line in the sand that says if we stay below this area, we're creating a lower high and should go back to create a lower low. If we can take this high out, guess what? That could be a higher high off of a higher low. And maybe fundamentals markets are starting to move back in a bullish sense. But let's run through some of the fundamentals and see if that's actually something with some probabilities to it. Because right now, really would rather a short position and look to target to the downside. So what supports this bias to the downside on NASDAQ? Iran war escalates with facility strikes. Powell flags oil shock inflation. So again, this is important, guys. Oil's making a big impact on inflation, causing the Fed to not cut rates, but possibly hike rates. This is an 8% chance that we have a 25 BPS hike now. This is a massive change in the market and a massive change in the Fed's direction. Fed holds rates. Powell hawkish. Fed sees 3.5 to 3.75 with single 2026 cut projected amid oil-driven inflation risks. So guys, oh, Trump's great. He did all this. Trump started this Iran war. We started attacking them. It's causing inflation to move higher, which is now going to cause the Fed to not cut rates, which is something else that the president was looking for. So can't really have everything both ways. We could look at this, show 11 more. We could see everything that's really affecting right now. Hotter than expected PPI print. Yields edge higher. I mentioned before covering the yields, guys. When yields and bonds are moving higher, stocks tend to move lower. So if we see that, we know this is another confluence to say, look for the shorts. Wall Street futures open lower. and just a few other smaller minor headlines, not as strong as some of these. And what could flip the buys? Fed cut still priced post data. Now, this isn't as strong, guys. It's always important to sort of measure and weigh how strong both of them are. Fed cut still priced post data. Well, not so much. We see that the rates, the percentages are changing. Let's take a look now at June. Same thing on June. Now it's a 9%. By July, we're looking at still that 8%. But look at the drop we've had. At some point, we were looking at, by July, a 45% chance of a rate cut. One more cut bringing us to the 325, 350 zone. Now, we're only looking at a 6% chance. We have a higher percent chance by July that we have a rate hike than a rate cut. That is a massive change, guys. Very important. And that's, guys, this could be a catalyst, right? We talk about catalysts in the market to give us direction, give us reversals. Well, guess what? We've been in this range on the NASDAQ and on the S&P on most markets for quite some time, since we could even call it since September, right? Where we were made this low. We had this as our last rally. And then we could say, I guess, since November that we have been within this range right here. That's our range. Now that we have our catalyst coming in right over here to the downside, that's what we need to have pressure. If this pressure does hold, we're going to see a strong break of these recent lows, and we're going to see some continuation. Now, let's take a quick look at the 4-hour time frame. I know our buddy Kyle over here mentioned something about the 4-hour not having that upper wick. Now, something I do want to point out when it does come to some of these candles, when it comes to technicals and looking for things like, oh, upper wick, lower wick, things like that, it doesn't always follow through, right? So right now what we're looking at is this 4-hour, and we see that it does not have that upper wick. Now, looking at every candle on the chart right now, other than this one, for the most part, every candle has an upper and lower wick, even if it's something as small as this one right over here. So I wouldn't be so convinced that, oh, it doesn't have an upper wick, we have to move higher from here, but I would keep in mind that it does have that in play. But for now, we're going to look at some other time frames, and we're going to see if we have any resistance points. So same deal, we had this demand zone, it held as support, we were finally able to squeeze through it yesterday. I'm going to look to possibly delete it, but what I'd really like to do is try to keep it there and use that zone. So that's a 4-hour. I'm going to show you guys how I found that. 4-hour demand, basing near a low, rally afterwards. We supported it overnight on last Friday. Came into it again. We gapped below it. I would not call this a break because we gapped below it with futures markets. We did not break it with price action. Over here is when we broke it with price action. So if we can get a strong close below this point, what I'll be looking for is a push back into that zone. So what I'll look for is we're making all of these lower lows, lower highs, lower lows, lower highs, a lower low, a pullback, and look for a lower high to form here on NASDAQ to follow that trend, guys. We are trend traders. The trend is your friend in the market, and that's not just a saying. It is the truth. Using market makes it very easy to find and spot that trend and confirm our bias. Now, something else I would be aware of is I'd keep an eye on this internal high right here. So this is a pre-market high, and the reason I'm calling this an internal high is because it's not the make or break. If we broke this high right here, we could still hold our more recent lower highs and break back lower. So I would even look for a possible liquidity sweep of our recent pre-market high to take a short position on the NASDAQ and look to target again. We're looking for a tight entry up here because we're looking for the reaction off of that. So wherever it creates our high, that's our stop loss. Once we start reacting, that's our entry, and we'll look for either VWAP or new low of day as our target. Now, something that you should be keeping an eye on if you trade the S&P or you trade the NASDAQ is going to be the VIX. The VIX is the volatility index. And check out the VIX right now, guys. It just closed. I want to tell you guys a little fact. VIX closed above $27 2 weeks in a row for the first time since COVID. That is a red flag right there. That is something to be careful with. That shows some confluence with what I'm looking for. My long would be your lower high area for sure. That's awesome, Kyle. That's great. Love it when things line up, right? It's important to get that extra vote of confidence, vote of confluence. So VIX, guys, moving higher. This is a bearish sentiment. If VIX moves higher, we're expecting markets to move lower. And the higher the VIX goes, Yeah, I got you. Absolutely. GBP USD. Remind me, I got you. When the higher the VIX goes, the more volatility is expected in the markets. So not only are we looking for VIX to move higher in relation to the S&P moving lower, but the higher the VIX goes, the better the chance, the bigger the move we get. So again, if we break this level here, now we're looking at ES. I'm looking for 65.80 today, guys. That's another 50 something points away from right now. And look at the S&P. It's giving us a similar setup. We had the 4-hour demand, just like NASDAQ did. We are trying to break it right now. So I'd look for a similar setup. Can we try to create these lower highs? These lower lows, pull back and create some lower highs. What we could also look for now, guys, is divergence. If the S&P can come back and sweep that high and move lower, so sweep the high right here, while NASDAQ holds the high, which means it does not sweep the high, that would be divergence. And we would look to take the short position on NASDAQ then because it would have more bearish momentum. And again, we're taking these trade setups with the right bias of bearish bias because of our fundamentals. So that's ES, that's NQ. Take a quick look one more time at the NASDAQ. Guys, make sure you hit that like and subscribe button. I do appreciate you all for tuning in. Post Market in the Morning, Tuesdays and Thursdays. We usually have Nolab, one of our co-founders of Market, on Tuesdays episodes. Usually we do get Jeev on for Thursdays as well, but he's a busy guy. He's got some things to take care of, understandably so. You guys could check out Jeev on Market's webinar, and that's going to be this Sunday. So guys, make sure you check that out. Webinar this Sunday, free webinar, and you'll also get a chance to win a free market account. Super cool there. Love doing giveaways. That was maybe my idea. I won't take credit for it, but you're welcome. All right, so that's what we're looking for on the NASDAQ. That's what we're looking for on the S&P. I want to delete some of these drawings out, so instead of clicking each one, deleting them, I'm going to hit my object tree over here. Click the top brush, hold shift, click the bottom brush, and just hit delete. Very simple, very easy. Look at that, guys. Perfect. We're getting a pullback. I want to see this pullback occur in the pre-market. We want to get a pullback so that when New York session opens, we can try to rip, catch everybody on the wrong side, and then move lower from there. Ideally, 24,742, that 15-minute supply from yesterday, that's my go-to spot right now. Our previous day low is right down over here. We've already broken previous day low today, which helps confirm our bearish bias. Our daily time frame is still very bearish as well. So there's not much saying, oh, let's try to catch this falling knife right now. So I want to be patient. We have to understand that we are day traders, though. So if we see a good move to the upside, you see your trade setup, you can take it. I'm going to be patient. I'm going to wait and see if we can get a possible short. Again, if we take out these highs over here, we sweep 24,725, we hit supply, we start to reject. Going to look for that short on the NASDAQ. That would be somewhere within the supply zone, or after the reaction, I would adjust my stop loss accordingly. But regardless, seeing how big these moves are to the downside when they do take control, even this one back over here, Friday the 13th, this big sell-off, the big sell-off we had yesterday pre-market, and then the sell-off we had in the afternoon, this is not looking good for the longs right now. But remember, that does not mean we have to break lower and continue lower. Markets do not just move in one direction. So that's why I am looking for this pullback. Pullback would give me a much better opportunity. And what's great with looking for pullbacks, guys, is we're not asking a lot of the market. We're not looking for, oh, give me a breakdown and a 200-point drop. No, if we're looking for a pullback entry and then just trading the range that markets have already given us, this is a reasonable target because markets have shown us that it is a reasonable move. They have just done this move. We're just trading the range. I do want to find some shorts today and trade back to the downside. Let's take a quick look at, we'll cover GBP USD real quick for you guys on market. And some requests for that. I got you guys. Let me know what your favorite asset is to trade and how you trade it. Do you trade Forex? Do you trade futures? Do you use market? What's your favorite trading strategy to use? Because trading strategies are helpful. They're great. Gives us some structure, but we also need to understand a little bit of a baseline of fundamentals. And if you don't, that's where market really thrives. You don't need to go to school. You don't need to spend hours online trying to figure out what CPI means or what non-farm payroll is, how it impacts this and that. Market's going to answer everything for you. So GBP USD pinned at 133 as Bank of England hawkish hold meets Mid-East energy escalation. So we're looking at a slightly bearish bias on GBP. Bank of England rate cut hopes dashed by energy shock. So right now, guys, globally, we're not even just talking ES and NQ. We're talking global economy, global markets are all witnessing an energy shock. This is national, global. This is happening everywhere, not just hurting the US, not just hurting Japan or hurting Iran or hurting Israel or hurting Russia. It's hurting everybody. Markets are plummeting. Supply shocks are real. Stagflation backdrop. UK GDP flat, energy shock rising. Zero January growth plus soaring oil prices create recession risk while inflation accelerates, limiting Bank of England easing scope. So guys, again, Bank of England now, they're dealing with possible stagflation popping in. They're dealing with a lot more too. They have the energy shock affecting them as well. It's not just us. Whenever you think something is major, but it's just affecting you, zoom out. Just like we zoom out on the chart, zoom out on the economics, zoom out on the fundamentals. If it's that big of an impact that it's impacting everybody, then it's going to be impacting markets extremely strong. February prices 2026 cuts to 1 from 3. So this is for the, what is this? This is fewer expected Fed rate cuts keep US yields elevated and dollar supported versus sterling. So pressuring GBP USD lower. Qatar LNG facilities attacked by Iranian missiles. I mean, that too, guys. Not only is it an energy shock, but there's an active war going on. They're attacking countries. This is not a peaceful time right now. There's no peace president. It's a very difficult time for the whole world. People are losing their lives. Oil shock, energy crisis. We even had the energy crisis from the AI situation. Markets are in turmoil. I believe the global economy is in a bit of a rut right now. And I do think this is going to be a much difficult year for markets and for all economies. We might see a global reset. I'm not sure if you guys have seen anything about that, but a global reset. Keep an eye out for that. I'll post something about that on social media if you guys want, about a global reset and what that means. So you guys can follow me at Trading with Kev on Instagram, and make sure you guys follow our social medias at market_AI. So nothing really could help support the GBP USD. State new confirms accelerated oil restart via Turkey port, further capping supply fears. So something like this, right? Trump also did something yesterday. I believe it was some type of law that he passed, or a 60-day, one of those 60-day whatevers to help the oil supply not go any higher. But let's take a look at oil, because that's our root of all these problems right now is crude oil, Brent oil. All of them are moving higher. So U.S. striking Iraq against Iran aligned militia groups. Top U.S. General Kane confirms deeper into Iranian territory, escalating supply disruption fears. So this is new. This is 5 minutes ago, guys. This is not slowing down. As much as Trump has been saying every other day the past week, the war is ending, we're winning. It's over. It's not. It's over. It's not. It's clearly not over. Read the headlines. Yeah, so we go live. So I go live in the New York session. I trade with the Bullish Bears community. Bullish, BULLISH, Bears. You guys can check it out, bullishbears.com. But I do Monday through Friday with them. Here, though, Market AI, I do like to go live Tuesdays and Thursdays, 8:20 to 9 a.m. Eastern, to help set you guys up with a little bit more of an edge, right? Give you guys that right fundamental background and show you guys how to use a great tool like Market. And I do also host live sessions as well. If we have economic news, CPI coming out Wednesday, I do host special editions of Market in the Morning for you guys, so you guys could see those play out as well. So today was Thursday. We did have initial jobless claims. The reason I wasn't on top of it was because we get initial jobless claims every single week. Every Thursday, 8:30 a.m. Eastern, we get initial jobless claims. And right now, we see our minimum was 210. Our max was 245. And it came out below our minimum. So it came out below forecast, came out below all of that. Gives a very bullish vibe for the dollar, bullish impact for the dollar, I should say. And because it's at the actual, it's really at an extreme low right now, which would be good for the job market, right? Job markets would be seeing unemployment come down due to reports like this. It would take a lot more initial jobless claims to be coming in lower than expected to really impact that non-farm payroll and unemployment. But it's a step, right? Once we can see something start to move in that direction, that gives us a little bit of faith, but we do want to be a little careful. So a higher than expected, and again, here, guys, is a great example of, okay, initial jobless claims, pretending I'm a new trader. I don't even know what it means. I'm going to click the brain icon and it's going to tell me. Key input for central bank rate decisions. Signals overall economic strength and trends. High impacts released. Often moves currency on surprise. So this would be our surprise. Prior month revisions can amplify the initial reaction. And then right down here gives you a breakdown. A higher than expected reading signals economic strength and is typically bullish for the economy. A lower reading signals weakness. My apologies, I had it flipped. A lower reading signals weakness. Watch for revisions from prior that which can amplify market movement. Take a quick look at the dollar right now, because remember, guys, dollar's moving lower. It's going to support gold moving higher and vice versa. So we see that the dollar hasn't really taken in that information with strength. If anything, it gave us an inverse reaction to it. But just like we see on ES and NQ, we don't want to be so zoomed in right here to a 5-minute chart that we say, oh, the dollar's bearish here. When in doubt, zoom out. Look at this, guys. The dollar's above 100. Right? We're not bearish on the dollar. We're seeing strength on the dollar. We're pulling back, sure, but we still have some overall strength on the dollar. And with that being said, we come back to gold, see what's going on there. And we see, look at that. Gold is also pulling back. Dollar's having a minor pullback. Gold is having a minor pullback. Same deal with gold, like the S&P and NASDAQ. I'd really be interested in some type of pullback area to take a short position versus trying to take a short just anywhere, or even just trying to take a long thinking that we're reversing in price. Because when I see this much momentum, and guys, this should be the same for you too, you see momentum like this, trying to go long here, you're trying to catch a falling knife. And what that means is we don't know when this drop will end. And if you take a long position here, well, then you might have taken one here or taken one here and got stopped out 40 times on the way lower versus you could have been trend trading that whole time and been taking some nice scalps for some money. Right now, look at that's 127 points to the downside from that zone. So the area that I'm watching today on gold, everybody, is going to be this 4682. 4682 towards 4700 key psych level right there. Looking for a short entry, not even looking for new low of day off that. That would be a massive move. Now we do have momentum, but if we can pull back that heavy, I'd much rather look for a smaller trade. So again, we're trading the range. I would be looking for a pullback, but I'm not looking for anything unrealistic. I'm looking for a pullback, us to create that lower high right over here, lower high, lower high, lower low, lower high, and then come back to another lower low. So again, ideally, we're trading that trend. We want to see some continuation. We want to see some momentum, but first we have to see a pullback. No pullback, no trade. Even if this is a big pullback right here, guys, this would be 100-point pullback on gold. At that point, a lot of people would be questioning if they should go along. So another pullback area could be this point of consolidation, where we see we consolidated here from 820 to about 835. Finally got a nice little squeeze lower, but it really failed. We did get some good volume in here, which gives me some confidence that sellers are active at the lows, but that doesn't mean we want to sell the lows. So still looking for a pullback, even 4606. That's right near key level 4600. So this could be trade setup number 1 that you're looking for, trade setup number 2 that you're looking for, and that is on gold. So guys, we covered gold, GBP, USD. We covered some ES, some NQ. Take one more quick look at the ES. I want to find a better trade setup for myself as well, because S&P 500 is something that I trade daily. And same situation as we were looking at NASDAQ, where we had that 15-minute consolidation point at 3 o'clock yesterday. That was when Powell was still talking before we had that next leg lower. So because we had that point, I'm watching that same area. So I'm looking for price to give me the same reaction that we created yesterday, right? Markets will not give you the same exact setup day after day after day, but they will give you similar readings. They will give you possibly similar setups. And the whole goal when it comes to trading and becoming a trader is finding something that you can repeat. So look for repeatability, look for markets to repeat themselves, look for the signs in the market. Very simple, right? Lower highs, lower highs, lower lows. I'm looking for a pullback, create another lower high off of this point right here. So we're not, a lot of people are zoomed in saying, oh, well, if we break pre-market high, then we're going to go bullish. We're going to go all the way up here. But that's not the case. We break pre-market high, we could reject the supply zone we have right above that. A lot of people will be trapped. We have to also think, guys, when it comes to trading, the best places to make money is where the most pain is in the market. So if I know that going into New York session open, everybody's going to be bearish. New York session opens and we get a 50-point pop on the ES right here. That would be huge, right? People would be freaking out. Oh my goodness, I'm out of my short. I got to go long now. Now they're going to be stopping out. This is where pain comes in. They get stopped out at those recent highs we're mentioning. So here's their pain. Now that becomes our gain, where those people are all getting stopped out. The mass gets stopped out. That's usually where institutions are looking to create their orders. That's where I want to be entering to, right? We trade with institutions when we use market. We do not trade against them. Let's see if we had any other headlines coming out. We can also check real quick too if we do have any other economic data coming out this week. So it is Thursday, March 19th. And no, nothing important tomorrow. Monday, we have construction spending, not too big. Tuesday, productivity revised, nothing big. Wednesday, a whole lot of nada. Not getting much news-wise next week. Import prices, but that's nothing that's going to be massive. Hit the brain icon on that and have market generate a breakdown for us. Let's see, what else do we have? Thursday, initial jobless claim. So guys, next week, if you're looking to trade next week, let's see, Friday. There it is. I just wanted to include Friday. Friday, okay, perfect. Okay, so we've got one big economic event next week, and that's going to be Michigan Sentiment Final, right? So we want to keep an eye on that one. Gives us an idea of the confidence in consumers, right? And the sentiment of the overall market. This can also, if at an extreme, give us some type of extreme move. So signals consumer spending trends, reflects inflation expectation shifts, market reacts to surprises modestly. Remember that. That's important that market tells us that. Not going to react too aggressively. Geopolitical risks amplify downside. And as we see with market, it gives us a historical data chart, past 2 years. We see that we've really been on a decline the past 2 years. We have moved higher since November, but we've sort of stayed a bit stagnant since January into February. So March, I would also like to see, are we above that 56.6 from last month, or are we back below in that downtrend again? Let's see, guys. This is a great episode of Market so far. I do hope you guys have enjoyed today's episode. We've got some great trade setups for you between the ES, the NQ, and even gold. So a lot going on and a lot more of a bearish tone. Now, if we are able to, again, somehow flip and get a short squeeze going. Now, guys, a short squeeze occurs when a mass amount of shorts and puts are all allocated into the market, and it's almost like they run out of selling pressure, right? So institutions are selling, selling, selling. They could only sell so much before they have to then cover some of their sell positions. When they cover those positions, that's usually when we get those very quick volatile moves to the upside. So looking at the volume that came in on this current 15-minute candle is spiking. I can definitely see this as an area that we start to pull back on gold. So if you are looking for a short-term trade, could possibly be a short-term position to the upside. I would just be extra careful knowing that overall we're really falling off a cliff here on gold, and it's not looking like it's slowing down for anybody. So don't be too zoomed in on the 5-minute. Don't be too zoomed in. Look out and make sure you're using Market 2 to have the right fundamental bias. Guys, I hope you enjoyed today's episode. That was Market in the Morning. Make sure you guys join me next Tuesday as well. I'll go live then too with No Lab. Have a great day. Trade carefully, and I'll see you guys next time. Peace.